Hello traders, Gary Wagner with the Gold Forecast. It is the 17th day of November, Wednesday, and this is the Daily Report. Gold currently trading under a little bit of pressure, down about $3 to $4, trading at $1332.70. On today's report, I'm going to talk to you about a potential bottom that we are going to be looking for, but most importantly, what we're going to be looking for. For those of you who have been with me for a while, you know that there is a particular pattern I look for at the bottom of these waves. We will talk about that and talk about the likelihood of that pattern occurring again. We'll do that all on today's Daily Report. According to R.N. Elliott, trying to discern the length or the bottom of wave A or an impulse wave, wave 1, are the most difficult to ascertain. I absolutely understand what he's saying. Because we use wave 1 and A as benchmarks, until they're complete, we don't have real information on how to gauge a impulse or a corrective phase. The only things that we can do is to look at straightforward Elliott retracement, trend analysis, and most importantly, candlestick signals for reversals to give us an idea. The first thing that I do is obviously look at Fibonacci retracement. Now, as you can see, I have put up two basic Fibonacci retracement areas. I am calling one a long Fibonacci retracement, the other one a shallow. This is the deep Fibonacci retracement. It is coming from approximately 1275 all the way to the top. And I have drawn the retracement areas in a much brighter color. Those are these areas right in here. The second retracement areas that I've drawn in are much more shallow, and they come from this bottom here at about 1312. That was the bottom of this last wave, and that goes to the top. And you can see I've put those in a much darker color, green, so that you can see that the market absolutely, as it began to come down, immediately traded through these retracement areas here, which is 1369 and 1356. That took us to the 61% level. It also went through the 78% level, which is 1340. What I'm finding interesting is as we get to the 61% level right in here of our larger or deeper retracement, we actually are starting to see some base forming, some bottom activity, which is indicative of a market that does want to attempt to form a base and then move back up. What sign do we need to look for to determine that in fact that market has gone as far down as it can and in fact might be moving back up? Well, for that, traders, you know, the ones that have been with me, there are a couple of pattern sets that we're going to be looking for, and for that, we need to bring up the daily chart. Traders, that last chart was a 240-minute chart, meaning every 4 hours we get a candle. On this, it's each day we get a candle. This is our daily chart here. And what I do want to point out is for those traders who have been following our reports, you know that there are a couple of things that we look for when we look for the bottom. One, we want to see it match with a logical or be close to a logical Fibonacci retracement area. In this case, we have a 38% retracement, 1322. The market is just above that at 1334. If it does in fact bottom in this area, I believe that the most solid bottom we can possibly see would be around 1322. So I do think that there is an opportunity for the market to in fact go a little bit lower. This is the kind of the area that I would be looking for. However, if the market is going to bottom here, there is a particular pattern that we tend to find at the bottom of these markets, and that pattern is, as you know, that three-river morning star variation. I talked about it in Kitco. I've spent countless report sessions here with you talking about that prior to it coming up. For those of you who are new subscribers, I do want to just take a second to kind of point it out. The three-river morning star is the best stop sign we can see in the market for the end of these waves. And the basic component of the Three River Morning Star is right here. Let me put that up on the screen for us. It's right in here. And as you can see, what you're looking at is when the market is in a defined downtrend, you will first get a black candle. That black candle will be followed by a small bodied candle or a star. And then that star is then followed by a white candle, and that signals our bottom and move to the top. Now, why am I spending all this time bringing this up right now? Well, I have to tell you, we certainly are not at this retracement area right here yet, are we? We're not even close. But traders, I am noticing something. Remember, before a market reverses, it has to stop. The doji is a stop sign. Well, the day is certainly not over yet. And depending on where it trades, I've seen this to be very doji-like, to a little bit wider. Right now, trading off about $4. So this body length has gotten wider. It depends on where it closes. But traders, do you see a similarity in terms of the market coming down, getting a black candle, and then a star? Now realize, traders, that for this star itself, color is not important. A red candle, meaning a higher close, would be a little bit stronger than a lower close. However, in the stars, color is not what's critical. What's critical is the size of the body. And again, the size of the body is the relationship between the open and close. So that if on the following day we received what we call the confirming or completing candle, we would then get a red candle with a higher high, and then we would get our confirming candle. And so that we have to have two things happen first. First, this has to remain a star. And then secondly, on tomorrow's trading activity, we have to see it has to be a red candle. And that red candle, the farther it goes into the body of this black candle, the better it is. But this would be that variation that I look for, that Three River Morning Star. And as I said, we have seen it countless times before. It's not a pattern that is not so much rare, but it's not a pattern that we never see in here. In fact, if anything, what I talked about on our last purchase, and we bought right in this area here, and that was based upon this Three River Morning Star, is that ever since this rally began and before, here you had the market go down. Here's that long-legged doji. And in this case, you then had an inverted hammer, and then you had the red candle. It's called a unique Three River bottom. You had it right here. You had it right here. You had it right here, here, and here. So we have seen it a multitude of times. It absolutely makes some sense. And I think that right now, this is absolutely something that we want to pay very, very close attention to and see if we get the proper signals over the next couple of days. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.